Good day, Prof. and everyone. Today the topic that I'm going to discuss here is understanding P2P or peer-to-peer lending. First, what is P2P or peer-to-peer lending? P2P lending is a way to individual and business to request funds from investors via a digital platform. Digital platforms serve as middlemen or intermediary between the requesters and investors. Second, we are going to look into how important is P2P funding in our country. According to Security Commission of Malaysia, there is a Malaysia 80 billion funding gaps faced by SMEs. SMEs is a very important component in our country's economy because 97% of business establishment are SMEs. SMEs also contributing 37% of our national GDP and employing 65% of workforce in Malaysia. Government intend to increase the contribution of SMEs to national GDP to 41% by 2020. As per any other country in the world, SMEs facing the same challenges in our country also. Because there's a lack of funding from the banks. The banks are reluctant to fund SMEs because number of reasons. One, maybe lack of requirements. Second, unable to fulfill the paperwork needed. Third, lack of collateral. Now we are going to look into how does P2P funding work. If a company requests fund via P2P funding platform online and offers investment opportunity, multiple investors may choose to deposit money and the amount may vary as little as Malaysia 100 up to thousands of ringgit. Funding continues until target is achieved, at which point the offering closed and the fund will be given to requester. Requester will make monthly repayment including the interest payment. The interest is capped at 18% per annum as per Security Commission of Nations regulations. Interest is charged based on credit assessment of the requester. Is P2P lending safe in Malaysia? Even though P2P lending new in Malaysia, but it has been around in UK, US and China as early as 2005. China recorded the largest P2P lending with total funding of US 300 billion in 2016. In Malaysia, Security Commission of Malaysia have appointed 6 P2P operators to operate P2P platform. And as per the risk, as any businesses or investment, there are always risks in P2P lending if the borrowers default in repayment or unable to pay the loan taken. The best is to do some background checks and do extensive research on the requester before choosing to invest. What is the advantages of P2P lending? First, we look into benefits to requesters or borrowers. First, submission for P2P lending is very easy because a company can just use online platform to apply. It will only take few minutes. Second, once the target achieved, the fund will be disbursed quickly and deposited directly into requester's bank account. P2P funding do not need collateral for requesters, and P2P funding charge better interest rate if the credit rating is good. And what is the benefit for investors? First, P2P lending giving better benefits than fixed deposit or unit trust. The investors free to choose who they want to lend the money. Third, they do not need very high capital before investing, because you can start to invest with 100 ringgit. Fourth, it allows the investors to diversify their investment. So what we can conclude here is, even though P2P lending regulated and new in Malaysia, but the investors must take extra precautions before choosing to invest to make sure that the investment is safe. Thank you very much.